in Melbourne now to take a look at how the local market's tracking at the moment, and it's continuing to push upwards. Evan, we keep talking about a near-term correction, a bit of a breather for the market after that 5% gain we saw in January, but it's just not happening. When do you think it's likely to come?
Yeah, look, we've been watching the market very closely over that sort of January period. It has been an absolute stellar sort of start to the year. As you said before, it's the best start we've seen since 1994, up just under that sort of 5% mark. Look, the most pleasing thing that we actually saw out of the start of this year is that equities are starting to look decidedly rosier. We have had 3 years of absolute dread where the market sort of traded sideways. Other thing that we sort of see that maybe continue to help pushing that market further forward is the fact that bond yields are rising. There's still a huge amount of funds sitting on the sidelines, and slowly but surely that sort of wall of worry that we saw over those last 3 years is starting to come down brick by brick. We do expect that there is a bit of a breezer coming. Look, next week we're obviously going to see the Reserve Bank reporting on Tuesday. Considering that we saw the FOMAC minutes released yesterday, where their language slightly changed from sort of the positive growth area to sort of a pause to sort of neutral, bit more dovish view, and it did sort of put a pause on the market there. So look, the pause might come next week, but on the general view, we actually see the market continuing to sort of move up. Our house view on the short term to sort of medium term point of view is sort of that 49.86, and that's the 50% retracement of the 2007 high to the 2009 low of the GFC. So look, the run looks to continue. If we look today at the moment, we're still up that 0.6 and look like getting stronger heading into those Chinese PMI figures.
Well, indeed, just look at expectations for those, because already regionally we're getting a flavour for a bit of a split down the middle inside these PMIs. Looking at new orders, I suppose, the devil's always in the detail. So just specifically, what's going to catch your eye and why? Yeah, look, specifically, China has obviously had 2 fairly stellar reports that it came out in January. Obviously, we saw it snap that sort of 7 quarters of negative growth with GDP coming in at 7.9. We also saw their terms of trade being absolutely stellar and really, really high. So if we do see the PMI index coming in around that sort of 51.5, which is what we're expecting, that's obviously going to continue to suggest that China is actually improving. The fear of that hard landing that we've been seeing over the last couple of years will also start to sort of decrease. And for our market, being a very commodities heavy market, it will hopefully see risk continue to switch on. Look, there are sort of 3 things that we're sort of looking at fairly closely. Obviously the hard landing sort of abating. It may obviously see that the Aussie market continues to be that sort of quasi play on China, and hopefully seeing more global investors jumping back in, and also the risk switching on back into this market as we sort of move further forward. All right, we're going to have to pull away. Thanks indeed, Evan, as always. We've got a live moment for you now across in the West. It's the Finance Minister, Penny Wong, has promised. This is a business breakfast. Let's take you there live.
I understand it's raining in Adelaide, so it's good to be here. I can also acknowledge my parliamentary colleague, Stephen Smith, who's